Let's talk about qualifying income when getting a home loan. So understand that qualifying income may not necessarily be your actual income. Qualifying income is exactly what it sounds like. It's income that the mortgage industry can use to qualify you for the home loan, but it doesn't necessarily mean that's all your income. So reality doesn't always meet the mortgage side is basically another way of saying that. So what is it? So first and foremost, let's talk about what it's not. So qualifying income for air quotes normal mortgages, meaning Fannie Mae, Freddie Mac, FHA, VA, USDA, things like that. I mean, there are companies out there that are called like non-QM, non-qualified mortgages, where you can do like bank statement loans. So if you get deposits, you're self-employed, money comes in, your taxes look like everything is written off. We can do loans where you can use the actual bank statements, and those are great. But that's not qualifying income, right? That's different. That's for like the bank statement program. So let's talk about what it is for qualifying income, the traditional sources, if you will. It's what you'd expect in terms of like salary. That's good. What it's not is it's not going to be cash. If you're a contractor and you're getting paid cash, again, you're going to have to go over to that non-QM side of things where maybe you look at the bank statement options. Um, it's going to be income you can document. You can prove. That's what makes it qualifying income. It's got to be consistent. You got to have at least a history to some degree of receiving it. Yes, you can start a job tomorrow. Heck, I don't care. You can start a job in 2 weeks, and I can use your offer letter for most programs. I can use an offer letter today saying this person's about to get paid and close on it before you actually get paid. But there needs to be a history, whether it's work history or something. But if you're commission, overtime, self-employed, there needs to be a longer history because the kid out of college today or out of trade school or whatever they're doing to graduate high school, if they go get a salary job tomorrow, we can use that income. But the person that's been sitting at home for 2 years and comes out and then all of a sudden goes to the workforce with a salary, they're going to need to be on the job typically for about 6 months. Depends on the loan program. But a lot of times they're going to say, man, if there was a job gap, they're going to want to see that there's new stability and that they're going to keep working. So again, the qualifying income, it doesn't, again, you may get in real money. Somebody may get in a paycheck and be a salary position, but it can't be considered qualifying income unless it's met certain boxes and things of that nature. Um, Hourly employee, same thing. If somebody's doing hourly, but they work 12 hours this week, 40 the next, 20 the next, like the income may there, but the qualifying income may only be on the 12 hours. If it's that inconsistent, they may go conservative and say, this is what we're doing. Variable income, like I've already mentioned, the overtime, the commissions, the bonus, you better have a history and it better be continuing and it better not be declining. So in other words, during COVID, a lot of industries, mine included, really good years of income because everybody under the sun was refinancing. The years after COVID, income goes down. It's hard to use that as qualifying income because you don't want to know where the bottom is going to be. Like again, the COVID year is great, next year is great, next year was good. So it's like then the next year is not so good, and then oh man, it got tough. So when it's declining, that commission may not be allowed to be used for qualifying because again, they don't know where the bottom is going or where it's going to end up. Um, so again, you're looking for predictability. Things like Social Security, VA benefits, um, disability, annuities, like those, absolutely. Right. That's easy. Those are going to continue. You can get the letters, you can get the proof that shows it. Things like alimony, child support, separated maintenance, divorce stuff, or separated stuff. It's hard to know just out of the gate. We got to get the documentation to make sure it's going to be likely and not likely, but will continue for 3 years. You got to show a history of it. Let's say it's alimony or even child support. If it just started last month, really hard to use it. Yes, it's real money, but we got to make sure the individual on the other side is actually going to pay. Because if we give, as a lending industry, if we give somebody newly divorced a home based on income we think should come in, and that individual on the other side doesn't pay, we got a problem. So that's where again the income could be real, could be coming. Maybe they've gotten it for 1 or 2 months. There needs to be a history to show that it's continuous, it's reliable, and then let's say that it's child support and the kid graduates for high school in 2 years, and that's when the child support stops. Man, you're getting it, and that's wonderful. But the reality is, can't use it for qualifying income. It's real income, but it's not qualifying income for underwriting because it doesn't have a 3-year likelihood of continuance. So you got to document all that stuff. And we're going to look at the tax returns. They're going to look at all the schedules of the tax returns. So like rental incomes or royalties, really tough. I've done one for a writer, a very famous writer, kept producing books. And so they considered it, continuous. It's really hard for oil and gas royalties. It's just hard to be predictable that you can guarantee it's going to continue. So that's I don't know that I remember an instance where we've done it. Rental income, like for rental properties, again, got to be history. You can use it, or if it's a brand new one, you at least got to show long-term rent. Schedule F, like the farm stuff, you can use it. It's just harder because again, you can have a good year with crops, bad year with crops, but it can be a thing. So for documentation, tax returns are certainly one way. Your pay stubs, your W-2s. Again, I've already said tax returns, your K-1s, if you're self-employed, P&L statements, your employer, right? So we're going to get maybe a VOE or something where your HR person, your manager can help validate, the commission structure and everything's going to continue the way it is. So again, all these things come into play when we talk about income, because again, I've said it probably 3 times, I'll say it again, qualifying income for a home loan is different than actual income. So you can sit there and shake your fist, say, man, I make plenty of money and I wish you'd just give me this mortgage, and I wish we would too. But the reality is, got to show qualifying income. So if you have anything where it's just not plain simple vanilla, and those are hard to find these days. So if you got anything that's just variable or out there or just different, I would absolutely recommend getting pre-approved, not pre-qualified. I would start early. I would get all the documentation together that you can. Let us take a big picture look, call the Mortgage Mark team. Man, we'll do a deep dive and make sure that we're not missing anything and that you're ready to go, because the last thing you want to do is say yes and ultimately find out later on it's a no. We don't do that. We do all our homework up front. It is annoying for everybody. We don't want to do it either, but we will do it up front to make sure you're good. So if you have questions, call the Mortgage Mark team. And as always, when you think mortgage, think Mark.